We were just talking about Treasury yields a minute ago. What are the technicals telling us about the direction of those yields?
Hi, Frank. Thanks so much for having me. Well, so far as we know, yields have been moving higher this year, but not that strong of a pace. And that's important because if you go back and look at what's happened over the last 3 years, there's really been a series of different phases all along the way. A tepid advance, which then goes into a spiking mode, then a retracement, which forms a higher low, and that gets us to where we are now. So the equity markets have been able to withstand the rate hike so far, but we don't want to see that accelerated again because we saw what happened in 2022. Really, the shock and awe was something that the equity markets didn't like. And so right now, because of what happened yesterday, there's a chance for that to occur again. And one of the things I look at as a gauge for that is just putting a 14-week RSI indicator on that chart. And we can see over the last number of years when things really got accelerated, that RSI got not even overbought, but extremely overbought, so 80 or 90. That hasn't happened yet. And again, the market is okay with rates moving higher. We've seen that now for almost a year and a half. But when that pace gets too fast, that's when things can change and hurt risky assets across the board.
Okay, so we need to watch for those higher lows when it comes to the 10-year on a technical basis. I want to talk to you about the dollar. We mentioned earlier at parity with the euro right now, moving higher. A lot of forecasts that it could move even higher from here. What are the charts telling us about the dollar, and how do you see that impacting the markets?
The dollar is a similar story with yields. Yesterday was the biggest move in over a year. And from a technical perspective, now we have a target near 107. And now if you look at a monthly chart of that, that is just a high of a range that's been in place since the end of 2022. Now, a lot of people think that that range can't persist for too long, but I'll point to what happened from 2014 all the way to 2022. That range was much longer, much wider, but overall, the market was net flat for 8 years until things really accelerated in 2022. Now, a similar story here, even though we're looking at a monthly basis, if we look at monthly RSI, only got overbought for different periods over that time frame. At the end of 2014 into 2015, and again at the end of 2022. So same story, where the dollar is proven that it can move higher. The S&P 500 and risky assets have been okay with that. We don't want to see things really get out of hand on the upside where things start to move at a much faster pace. It's a very similar story. So I think overall, though, the dollar hasn't proven that it wants to break out of this range yet. So I'd be more of a seller when it gets to 107 at this point, as opposed to buying the breakout, unless things again, push through in an aggressive way.
So, Frank, I just want to be clear in your thesis here. According to your research, the dollar's been kind of in a trading range since the end of 2022. You believe that's actually been a positive or neutral for equities, but if we see a sharp upside move, that could be a strong headwind?
Correct. Right. And we just go back to 2022 and saw, how that played out. Okay. And again, I don't think we're at that, area right now, even if rates, and the dollar continue to move higher. We just don't want to see that happen too quickly and all at once.